Hello traders, I'm James Day, the risk-free trading coach. So in today's video I want to talk about two candlestick patterns that I look out for and how I interpret them to enhance the probabilities in my trading. So the two candlestick patterns are pin bars, such as this candle here, and outside bars or engulfing patterns. And these often occur around support and resistance price levels. And so what we want to do is find when we see these patterns at support and resistance and use them to add probability to our trading decisions. So candlestick patterns alone are not a good indicator or reason to enter a trade. We need to align them with the fundamental basis behind the currency move and also the sentiment or the mood of the market. And so when we have all those three, so we have fundamental, sentiment and confirmation in price action, then we have a high probability trade. And so if we look here, the pound JPY, we had a big move starting 2012 up until early 2015. And this is because the monetary policy between the pound and the JPY, the yen the Bank of Japan embarked on one of the biggest quantitative easing programs in history. And so this weakened the yen, and we can see this huge 8,000 pip move over 3 years. And so once we understood what was going on fundamentally, we then needed to find price levels where we could enter. And you can see here there was a price level at 147,900. We had initial creation of resistance, we had a breakout of that price level, and then we came back multiple times. We had a pin bar, and then we came back, we had we didn't quite have an outside bar or bullish engulfing pattern, but we did here. And so this is multiple confirmations that we had a price level in which traders wanted to buy up the yen. So then again we had resistance created here, we had breakout of resistance, came back, and then we had a pullback, and we had multiple ways to enter this trade. Here we have a pin bar, and we didn't quite get a second pullback, but we did have some outside bars within that initial trend. And so what you want to do is you want to use this as confirmation of price action when you see these outside bearish or bullish engulfing patterns, and use them as a high probability way to enter the trade. And so in my analysis, looking at different outside bars on different currency pairs, it often precedes that the next week will be in the same direction, but that's when you align it with the fundamental trend. So I just want to finish off today's video to show you on the USD JPY. So this week we had FOMC, which has given the dollar some weakness, some bearish sentiment. We also had Bank of Japan. The monetary policy was unchanged, which was unexpected by the market, and so we've had this big sell-off in the USD JPY. And so we've got this outside bar or bearish engulfing pattern. So we've got various price levels at 105 where I think it's going to go back and test where there's previous resistance and support, and so it's likely that next week will continue to be bearish. So hopefully I've given you an insight into picking high probability trades using engulfing patterns and pin bars, and using these in line with the fundamentals and sentiment, and picking price levels around support and resistance as confluence areas. So good luck in your trading next week. Let me know how it goes.